Hello, Nasdaq followers, and welcome to another edition of Sector Talks. I'm your host, Leanne Alfaro. Joining me right now is Josh Ellman, Senior Specialist at Nasdaq IR Intelligence. Thank you so much for joining us.
Thanks for having me.
So we are talking a little bit about the holiday season last year and how sales were a little bit disappointing, but how have we done in the first quarter of this year so far?
Yeah, unfortunately, last year was a little bit disappointing towards the end of the year, and I think there's going to be a little bit more disappointment as we look into the first quarter. Unfortunately, just in terms of overall consumer spending, it's really been inconsistent. So we recently had February retail sales delivered, and that showed that February was a pretty lackluster month when it comes to overall U.S. Consumer spending. And also, too, it did show that January showed a marked improvement from the original report, but at the end of the day, January is somewhat of an inconsequential month when it comes to overall consumer spending. So I do think things will be very choppy and inconsistent when it comes to consumer spending. Additionally, we're going to be getting another report for March because of the government shutdown in a few weeks. So I think all eyes and ears will be on that report to figure out whether the consumer is actually spending his or her dollars.
Absolutely. And then looking into the second quarter, are there any kind of indicators of consumer strength?
Yeah, I mean, I think there's a lot of green shoots out there when it comes to overall consumer strength. I think predominantly the U.S. stock market is a great tailwind for overall consumer spending. The U.S. equity market and a lot of other asset classes have had a phenomenal first quarter, and that will drive consumer sentiment. So when the consumer ultimately opens up his or her portfolio 401k statement and sees that their net worth has grown, they're going to feel that much more confident to go out and spend their dollars at wherever discretionary store that they see fit. And then also, too, we recently heard from the Fed that they're going to be slowing down the level of rate increases and potentially stopping those for 2019 altogether. And that's going to help the U.S. consumer overall. And I say that because we already saw an impact in mortgage rates. And once the Fed said that they will slow their level of increases, mortgage rates declined pretty precipitously. And as a result, we saw a huge boom in refinancings, and those dollars will get put back into the economy as households have lower mortgage payments and will ultimately spend those dollars elsewhere.
All are certainly positive indicators. So what are some concerns that you have heading into the second quarter?
Yeah, there are still some lingering concerns. I mean, if you look at some of the recent confidence prints, it's mixed to say the least. It's still at a healthy clip, but I would say kind of in line with how U.S. consumers are spending. Ultimately, confidence levels are rather choppy. Elsewhere, we've had a lot of weather-related issues. We had those issues occur in the first quarter, and we're still having those sort of weather-related issues in the second quarter. We've had a huge storm in the Midwest that's going to impact overall consumer spending. And then what I'm really looking at are tax refunds and the pace of tax refunds. So this is a big time of year for consumers to get back money from the government. Right. And what we're hearing anecdotally is that the tax refunds, while not necessarily as much as last year's, the number of refunds are dwindling down, and also too, taxpayers are procrastinating a little bit when it comes to their taxes. Hopefully you paid your taxes.
I certainly have, and I'm so pleased that I have, because this weekend will be a scramble.
Exactly, and I think ultimately the longer people wait, they're going to be surprised by potentially a higher tax bill, and that will have an impact on consumer spending. It's a big piece of this time of year, and it really impacts the auto space. So if you look at used car sales, it's very correlated to how tax refunds are being put to use.
That's interesting.
And then one last point in terms of one other concern that I do have, and it kind of dovetails with driving. Gas prices have shot up over the last few weeks. I saw nearly $3 a gallon the other day here in New York, and that's going to have an impact too, as consumers are going to have additional outlays in terms of gas purchases, and that's going to have a drop down or drill down effect on other purchases in the consumer world.
Now we're heading into earnings season here. So what will you be focused on during first quarter earnings season for the consumer standpoint?
Yeah, it's hard to believe that we're already here into first quarter earnings season. There are a few major themes that I'm looking at. The first being margins, how promotional companies have been to draw in consumers. We're hearing and seeing a lot more regarding promotions and companies having to offer promotions to draw customers in, so that will be one factor. The other factor when it comes to margins will be how are input costs going to impact the bottom line of these consumer companies. In terms of other themes that I'm looking at, I'm looking more along the lines of store closures. Are we going to see a continued trend in that? E-commerce versus brick and mortar. And also too, just how companies are feeling as we head into the second quarter. As if you look back to the second quarter of last year, comps were very, very strong, and when you're kind of basing your comparisons this year to last year, it's going to be tough to jump over that hurdle of a strong second quarter from last year as we lap the change in tax law and more money being in consumers' paychecks. So there are going to be a lot of key themes and things to look out for, and it should be an interesting quarter. And I think ultimately investors will really try and figure out how the second quarter and the rest of the year is going to look based on those reports.
A lot of hot topics to come back and circle back on post-earnings seasons and in the thick of it as well.
Yes, absolutely.
Josh, thank you so much for joining us. Really appreciate your input. And NASDAQ followers, please stay tuned for an episode of Trade Talks coming right up.